And welcome to the Boom, Doom and Zoom show. I'm Peter Switzer, my colleague Paul Rickard's here. Paul, how are you?
Good, thank you, Peter.
I should reveal to you that Paul's come to work today a little bit more negative than he usually is. He didn't even like the fact that unemployment fell. What did it fall by, Paul?
Look, it's up. Employment rose by 110,000. I think I did have the ABS data up a second ago, and I went off.
And I think unemployment actually fell from 7.5 to 6.8 or something, which surprised all economists. They all thought it would be heading up rather than down. So, and considering that Victoria is in lockdown, look, I've got to say, Paul is very suspicious of ABS data. And I've got to say, with Victoria locked up, it has to play around with the economic equation, doesn't it?
It does. Yeah, I mean,
the statistical models cannot be really as trustworthy as they normally would be.
The unemployment rate fell from 7.5% to 6.8%.
It's remarkable. The stock market should be up, guys, on the strength of that. But maybe even the stock market is questioning the veracity of these figures. But better to be wrong in a positive direction than wrong in a negative direction.
I think the market has suddenly woken up in the last few weeks that things are going to be a lot tougher going forward in October, November, December than they have been. We've been living in la land a bit because of JobKeeper, JobSeeker, 5 million Social Security recipients getting 2 one-off $750 payments, the $35 billion that's come out of super. This stuff is about to stop. There's been a few people have felt some pain, but most people haven't.
Okay. And he's on the public record. Yep. He's on the public record that the December quarter is going to be terrible. All right.
It's going to be a lot tougher going forward.
Yeah. Well, I'm going to go on the public record and say that the December quarter will be better than the September quarter.
Yeah, but you're an economist, right?
Oh, that's right.
I'm just looking at
that's how bad. Yeah, you guys are on the rubbish when it comes to December. We won't get the numbers until probably February, so that's how long we can tease each other for. But let's get down to the more important things. What's been going on in the stock market? We've got questions coming in. Robert Millevoix is there. Rob, how are you? Your question is, with the economic recovery, stocks which present a better buy, Transurban versus Atlas, and Sydney Airports versus Auckland International Airport?
That's a good question. I'm a little wary of Transurban. I think it's a great company, but I think the toll roads in Australia could have just sort of peaked. I think it's a major cost for people, and Transurban's track record on delivery is not as good as it used to be. It used to do projects pretty well, but North Connex in Sydney still hasn't got there. The Westgate stuff is still sort of, they're now dragging that out with the Victorian government. So I just think Transurban's got a flaw. Atlas Arteria which is the old Macquarie company. It's more offshore. I probably would prefer that a little bit, but question mark, I haven't put a lot of faith into that the last few months. On the airports, I think a lot of people like Auckland Airport better than Sydney Airport. I sort of highlight with Sydney Airport, at some stage the market's going to worry about competition risk. When it does, it's going to worry really big time. It doesn't talk about it. I'm the only one who seems to talk about it, but competition is only less than 6 years away.
Yeah, Paul's the one talking about certainly, I agree with it. I think Transurban is basically price perfection. I wouldn't think upside. In fact, it probably will go down. Atlas Arteria, about a 7% upside from the analyst. When we go to Sydney Airport, I've got a funny feeling that they're going to like Auckland better than Sydney Airport. 3.9% for Sydney and Auckland International Airport. Gee, Paul, they don't seem to do it.
No, it won't be there. I think if you're actually looking for a pure play recovery risk, I reckon Qantas is a better bet than the airports.
Yeah, I'm kind of with Paul on this one.
Maybe a little higher risk, but I would put, if you really think that's going to happen and travel's going to pick up, I'd go Qantas rather than the airports.
Yeah, I was actually very surprised. I got a note from Qantas today about my frequent flyer points, and there were a lot more than I thought. and I guess you
could share them with your friends, couldn't you, Peter?
Yeah, I could. But I think the bottom line also is, Paul, that if Virgin doesn't come back as good as it was beforehand, Qantas will be a beneficiary. So it's going to be very important for Qantas' share price is how well Virgin does retaining the business customers that they did pick up under John Borghetti.
Ring the bell.
Yep. Next one. All right, good. Rami with an actual real life question. Rami, what's your question, mate?
Yes, hi. I'd like
Take it away,
to
Rami.
hi, can you hear me?
Yeah, very much. Yeah.
Okay, very good, thank you. I'm just wondering what's 2 sectors that you would get in right now, and maybe 2 sectors that you would get out of it right now. Thank you so much.
Paul, did you get that one?
What 2 sectors? Look, that's a good question. I
Get in or get out?
get into. I haven't really given that a lot of thought. I think the consumer discretionary sector, I think there's a lot of money built up on recovery plays. So I'd be a little wary of that. I wouldn't be touching consumer discretionary at the moment. I think that's going to be tougher. So that's what I'd be, and I think we have seen those stocks come off. I'm still not sold on the property sector.
Paul, you look at the various groups within the ASX.
Yeah.
What have the stocks from 50 to 100 done compared to the top and the bottom?
They've done a lot better until recently. I guess the 2 I'd still look to get into is I don't think the theme of the technology has yet changed. So, and I think people will use this pullback to reposition. So I think IT, it's just because I think that mega trend is still there. And I guess the other one I'd look at is some of the beaten up industrials. I think there's more value in those companies. Yeah. I think people have already priced in the consumer coming back. So the risk is the other way. Yeah. Property sector, I really just don't know what's going to happen with property. I'm worried. I don't know whether the market has yet changed. Has seen the impact of that fully. Yeah. Financials, I'm sort of neutral on.
Because on real estate, you have to think office and retail. It's still a big question mark.
I still don't know whether they've been hit, the stocks, but the companies are now raising money, and I still don't know whether things like capitalisation rates have yet factored in. We haven't the change in demand, potential change in demand. So I'd probably stay IT, and I'd probably be looking at it in some of the industrials if it was me.
Rami, for next Monday, I'm actually going to look at if a vaccine shows up by early next year, what are the stocks that are going to be the beneficiaries? So the ones that haven't been bought on a recovery, they're the ones I'm going to look for. And I think a lot of them will be industrial, Paul. You know, ones that haven't been like the supermarkets, they haven't been the IT companies, the growth companies. I think they're the sort of ones I'm going to go for. I think, you know, if you're a real thrill seeker, you might take a crack at maybe the best retail REIT and the best office REIT, but it's still a gamble, Paul, isn't it? It's still a gamble because a lot of people do not want to come back, and they're going to be trying to negotiate it. And what happens to the lease negotiations is going to be anyone's business. But that's my story for Monday, Rami. So keep an eye out for that one. Okay, let's go to Suresh. What is your view on Smart Pay? Would you add Smart Pay to your ZEET? I'm not a big expert on Smart Pay. Are you, Paul?
I'm not a huge fan of Smart Pay. I don't think it's in the same caliber as the other stocks. So I probably would pass on that. I mean, it's back up towards February highs.
Let's get Julia on that one on Monday, guys.
Okay.
Certainly, we'll just have a see if there's any. I don't think the analysts are actually.
No, it's too small.
Too small. Yeah. Yeah, but it's a good question. I'm really happy with the Z and the T. The E's in the middle are they're going to do well when a vaccine's in town, I think. But certainly adding the Smart Pay, I think it's probably too fresh, too new. Question from Craig. Craig, you want to give us your question live?
Yeah, g'day guys. I'm just wondering on your thoughts on WOR at the moment. It's currently trading at $9.51. Do you think it's got more downside in that stock at the moment?
Yeah.
Interesting. A lot of people have got a little bit bullish about Worley, and it's one of those companies that I found over the years incredibly difficult to back.
Yeah.
And I don't know too who have made money out of Worley Parsons, right?
One of my friends did, but he played golf with the CEO.
So I think I read something from Macquarie the other day who nominated as one of their top stocks. So look, it's got out of some of its engineering parts, which the market liked. That's worth looking at what the analysts go.
Up 24%, Paul.
We'll just have a look. I just don't know whether it's doing much at the moment to really go. Look, it's one of those companies, I guess, that you'd have to say in recovery mode.
And infrastructure
could look okay.
Because they're a service supplier to that kind of space, aren't they?
Yeah.
Yeah, if you're going to have a crack at Worley, Craig, it's probably the time to think about it. And so the analysts think there's 24%.
Yeah, I mean, a lot of fund managers won't go near Worley because they've been so badly burnt in the past. And
they've looked like a good company at many times.
No, it has a small fan base. So,
we actually should try and get the Worley CEO on the program, Paul, as well, because we get that question a fair bit. All right, good question, Craig. We have told you.
I mean, I'll just put in context. I mean, the analysts are mixed. They do see upside, but they range from a low of Morgan Stanley, who's underweight with an 845 call, to an outperform from Macquarie at 1346. So fair bit of divergence.
Big range,
and I guess we've seen it with Worley before. It has unfortunately been a company that has over time disappointed. So it's higher risk backing a company like that.
Okay, a good question from Jake, who a lot of people would be thinking as well, IAG.
I don't know why IAG is so unloved at the moment. And I guess this is partly the issues in the insurance market. I've got it in, I've held on to IAG, but it's certainly lost its fan base, and it doesn't, at this point in time, I don't know what the question is. We got the question?
Well, I just basically, what are your thoughts on IAG? I'll just show the analysts are up about 27%, so they're with you, Paul. They're a bit surprised at the markets. I reckon the whole coronavirus thing has basically raised question marks about lots of things. And insurance, like a lot of people might not be paying their premiums now for starters. And so what happens is, and there might be a lot more claims as well, some shock, surprise claims that in fact would come in. And so premiums have to go up. And when the premiums go up, insurance companies tend to do well. But in the interim time, and the last company report wasn't Flash.
No, it wasn't Flash. I mean, there was some question marks about, personnel changes and the CEO and stuff. So look, I think IAG is much more in buy territory than sell territory, and I think it's probably almost about to get into that stock. So I just don't know whether it's going to re-rate in the short term. When you look at a graph like that, it's been pretty much a one-way train. So,
but what about your story that you never buy insurance companies and airlines?
Well, IAG is a bit different. I'm less worried about IAG because it has so much of that topic is outwritten to Warren Buffett's group, right?
Yeah.
So again, you remember there are a lot of claims in the first part of the year that they're going to have trouble getting that in higher premiums. You say, Peter, people perhaps aren't paying and all those sort of things. So it's hard being an insurance company. But I think margins are starting to improve. I think it's probably much more in the buy territory.
But also what's interesting, if Paul's so right about the world going into a hell in a handbasket over the next 3 months, well, maybe an insurance company could find a lot of people not paying their premiums. But if I'm right, that things are actually are on the way up, well, then it could be good for your scenario. Let's hope I'm right, eh, Paul? All right, let's go to the next one. James, what are your thoughts on NAE as well as its SPP?
I have to say I've never heard. I know nothing about New Age exploration, so we might have to take that on notice.
Yeah, that's definitely.
And I wasn't aware it was doing a share purchase plan. It's in the penny dreadful category, but it's been going up. So look, I think we'll have to take that on notice. You won't find that.
I won't find that there at all. I'll still give him a chance. All right, so that's another one for Monday night show. NAE. We might not even have an expert who's good on that one, James. Daniel, hey guys, keen to hear your thoughts on Lendlease. Now you've become
I'm a little warm on Lendlease. I think it's a long-term buy. I don't think there's as you can see, I don't think you need to rush. It's sort of what I've been said for a while. Lend-Lease, I think, is doing a really good job in a difficult market, and it's trying to become a much more integrated company in terms of its development activities. Less on construction, more on development, and more in the financial side, i.e., managing funds, property trusts, and other real estate assets. So it wants to get sort of 80% of its revenue coming out of development risk and financial services risk as opposed to construction risk. Now, one of the issues about Lend-Lease is that it's very much backing what it describes as the urbanisation theme, and that being particularly strong on what it says is 15 sort of mega cities. So that's sort of and so where a lot of its investment is going into these sort of integrated type suburbs where you might have, aged care with childcare with, residential and retail all put together in suburbs. And it's got 15.
It's innovative.
It's got sort of 15 marquee cities where it's backing projects in. Now, that theme looked high and dry and looked really good until the coronavirus hit. And there are some people say, well, maybe we will see a trend away from some urbanisation, at least in the centre of the cities, much more into the suburbs. And how does that affect some of the developments that Lend-Lease has? So I think, there's a question mark about it, but I still think it's worth backing. I don't think there are any catalysts in the short term to re-rate it.
No.
So I think
the chart's not telling you it's time to buy. It's going sideways, really.
But I do like, and I think you find the analysts, I think overall, are fairly positive on the stock.
About 19% upside. Paul, I'll give you two interesting developments. I interviewed Bernard Salt yesterday, and Bernard, of course, is a demographer. And one thing he said that he thinks is going to be implication of the coronavirus is that a lot of those cool and groovy urban suburbs where people like to go to intimate restaurants and places like that aren't going to be as popular because people are going to have this sort of standoff thing. So open spaces are going to be more important than cozy Parisian type places. Plus, I've done 2 interviews of real estate agents for my property show, and both of them have said a lot of activity in urban people, city people, wanting to buy places like in Barrow, Southern Highlands, or outside of Melbourne. So there's that kind of movement. That's kind of consistent with your story. Once upon a time, we all wanted to be Manhattanized in the cities and really cool and groovy urbanites. That could affect that Lend-Lease plan. We have to look into that.
I like it because I think it's got a good strategy. I like this. Well, you can debate the strategy, but it's very coherent strategy, what it's trying to do. And I think it's a company that's very deliberate about the things it's taking. That gives me confidence in management.
But they're also into aged care homes as well.
Yeah, and that's part of it. But they are. It's not just. And they have some other sub themes. But we think probably in Australia think more about. We see its cranes up and think more of its construction company. It's really construction's only a small part. It's mainly in development where it shares the risk with other people.
Have they dumped that engineering division?
They've dumped the engineering division.
That was a big problem. Okay, let's go to the next question. Heng. Gents, if you already hold CHC, does it make sense to buy CLW?
Well, they're totally different things because CLW is the pure play Longwell REIT, and Charter Hall Group includes is more the management part of the business. That's the company actually managing these funds. It has got, I think, some of its own assets as well, but you're more exposed to the management's ability. Just go back to the other thing. I think you'll find that Charter Hall, one of the best property managers around. So it does have all bits inside in the Charter Hall Group, but I think you're actually looking at quite different propositions.
Yeah, and I think CLW is the one. As you guys know, we've been talking it up. A lot of our experts on the TV show have liked CLW for a long time. That, I think, is the most reliable one. Even though the analysts don't see it going anywhere, either down or up, probably over time, this is the one that's going to deliver more than the other one.
Does the CLW, do you have a question? Is it about the SPP or something? Because that's, because there is an offer out there at the moment following its recent capital raising. So I think at about 493 or something. So
okay, here's a good question from Tony. Hi, do you think the emerging market India ETF? IIND is a good place to invest in the future.
Look, I'd like to just see what that graph has done. I
Looks pretty
really
good.
struggle with India, and well, if you're going to get a bit longer term, do we have any? Can we just go back over a few years? Yeah, see, it's sort of,
It was on a rising trend into the coronavirus.
that's the max, is it, John? What's the first period? That's about a year and a half, is it?
No, it's gone beyond 5 years.
Yeah.
So,
Sorry, 5 years? No.
well,
No.
well, you take us back, John.
You can't. It's
okay.
only goes back to
in 2009.
I'm a pass on India. Sorry, I know some of our listeners won't like that. But,
I'm more courageous than Paul. I think Tony, you're onto something. I wouldn't have a massive exposure to it, but I do remember one of our best fund managers. What was that lady from Ellison? Mary.
Yep.
Come on, John, you must remember that. Huh?
Manning.
Mary Manning.
He's a good man, John.
From Ellison. She always said that India is the place to be in the future, and this is probably an okay way of playing it.
It's probably an okay way to play India. I just don't know whether you want to invest in India. That's my question.
Don't be like
I'm not being. I'm just saying it's been a disappointing place to invest in.
Yeah. Okay. Good point. Yeah. But I think if you look for diversification, this could be a nice surprise. All right, Travis, interested in your thoughts on PE1, Pengana Private Equity.
Look, that's a listed investment company or listed trust. The question there is, I just don't know what sort of discount it's trading to its NTA at. I can probably look that up as we're talking. They used to have a pretty good investment track record. I don't know.
They did. Yeah.
I don't know how well they've done in the PE space.
I interviewed the CEO, Paul, only a few months ago, and they were performing pretty well. Remember, these guys are less sensitive to overall market. Is this the listed one?
No, this is the listed one, yeah.
So
and it's investing in sometimes things that don't get revalued that often. So, look, it's one way to pay private equity. I'm just looking at its net asset value at the 31st of August. I suspect it's at a discount. So
the thing about this, Paul, isn't it, that the underlying assets that they're invested in aren't market affected. Only the market's assessment of what they're holding.
Yeah. But look, actually, the net asset value, it's about net asset value. It's 120 at the 31st of August, and it was trading at
124.
That's currently, but it was trading at the time at about 120. So 120 on the 31st of August. So it's exactly trading at net asset value.
Yeah, it was curious, Paul, is why it's fallen away. Like it's bounced out of the.
Well, obviously, some of the private equities is having the COVID effect. I'd have to look. You'd have to really to study what it's invested in to get an opinion on that.
Yeah. Okay. Oh, all right. Okay. James was apparently looking at a company called NEA, not NAE.
Oh, Nearmap.
Yeah. That's right.
Okay, so I think, sorry, James, we that's why this.
No, I think you typed in the wrong.
Yeah,
okay.
Our trusty friend there got the acronym wrong. Okay, Nearmap's a different proposition. I haven't looked at Nearmap for a little while. It is one of the more volatile stocks out there. Let's do some. I don't know why it's come down so much. What was the question? So, well, it's worth looking at the analyst on that one.
I'll go back on that one. Okay, and it's SPP. There's an SPP on Nearmap.
Okay, so did it raise? Yeah.
NEA. It has done well in
yeah, I'd probably be inclined to back Nearmap.
30% upside. The analysts say this was one that Rudy really liked a few years ago, and it ripped out of Rudy's tip. Then it got clobbered, and I kept teasing him every time I'd see him. But it is essentially a good company, I think. And just at times it gets that kind of as you can see, it's rocketed out of the March 23 low of the coronavirus crash. Now these are classic to me profit taking. You know, this done so well. I'm not surprised to see people taking profit, but the analysts still think there's about 30%.
I mean, what I think the question here is, it did a capital raise at 277, and it's been waxed since then. So and one thing with the SPP is you won't pay any more than the current market price less a discount. So if you go into the SPP, you won't be. It's unlikely to be paying 277. You'll pay effectively the price in the 5 days leading up to the close at lesser discount of 2.5%. So you can argue that you're sort of pretty well market immune. You can invest in that at the moment in confidence. I'm not sure what triggered the massive sell down from 277 in the last week or two, and why it hasn't recovered. So we might just have to do a bit more work on Nearmap.
Okay, Nearmap is a good one for the show. A lot of people are interested in that stock. Next one, Paul. A hand up. Oh, a hand up. Okay, yeah. Chris Turnbull. Chris, take it away, mate. The question.
Pretty easy. How low can Telstra go?
How low can Telstra go, Paul?
Look, I'm surprised people are so negative on Telstra, but I mean, sort of reminds me of a period of about 6 or 7 years ago when it went down to 250 and was a screaming buy.
It was,
maybe that's about 6 years ago when no one loved it. I'm sort of, you know, I don't think it reported that badly, but the market, and I don't think the analysts think it did either, but maybe the expectations of some of the so-called institutional whiz kids out there it were disappointed. So, look, at the moment it's friendless. The analysts, I think, are pretty positive.
22% upside.
It's to me, it's in buy territory, not sell territory. What's going to change the view on Telstra in the short term? That's the hard question. You know, if the market was to rally 5% next week, would Telstra be in the 5%? I'd probably say no. So that's the trouble. I just can't see the urgency. I guess probably somewhere in that sort of 275 level. Even maybe we have to look at the chart out over 4 or 5 years. Go back a bit. Can you just extend the chart? There'll be a technical level somewhere where I reckon you'll find that buyers will come into Telstra.
Yeah, because certainly the chart is not making you want to buy now, but you know, it's going to be at some point it will kick up, and now is not the time. 281.
It's getting close.
I think so too. Yeah. Chris, thanks for alerting me to it. I didn't realise it had gone so low. All right, okay, let's go to the next one. Michael Nikolovsky. The REIT CIP, that's Centura Industrial Corp. I think it's actually been a pretty good performer, hasn't it?
Yeah, I think that's done all right.
Yeah, coming out of it for a REIT, but they are in the industrial space, which is the best space to be.
Yeah, look, I'm pretty well managed. I'm just not sure on the forecast, but it's
that's
just
2% up.
Yeah, so look, I'd give that a tick. Whether this is the best entry price, question mark.
No,
but,
about March 23 would have been bets.
Yeah, if you're looking for industrial property, it's a pretty well run. They're a good manager. It's a well run REIT, and I think you'll find that that's probably one to look at.
Yeah, I don't think it's going to disappoint you because it is definitely in a good space. I don't think we're going to be running away from online purchasing, and the industrial REITs, the ones that have all the warehousing and fulfillment functions. Paul, Anil wants a quick answer about BRN, the 6-month 4C.
Oh, this brain chip, this is the hot stock. I think that chart tells you everything. Look, it's way ahead of itself. This is a pure punter stock, right? This is in the category of, there's no reason why it should have. You look at the volume go up there from nothing.
Yeah.
So you got to pick this. This is trend momentum stock.
Yeah. So it's like backing the 101 shot. Prince Penzance in the Melbourne Cup, isn't it? This is.
Yeah.
Yeah.
It's a bit like the company that listed on the US last night in.
I missed that one. What was that?
Oh, the big listing last night for the sorry. Yeah, Snowflake. And you look at its market cap. Went up 150% last night. Its market cap is more than so many other well-known
They must
companies,
use
right?
a Snowflake's hill and
Snowflakes haven't changed,
Yeah,
right?
chance,
Like it's pure momentum. So I
Okay.
reckon BrainChip's not even close in that same category, but is like that. Yep.
Now, here's the one that you be across, Paul. Cromwell, some board upset at present. Any comments?
I'm not on top of that
Oh.
issue, so we might have to take that one on notice.
What's this
Cromwell
chart
Property Group.
going?
Is that, have we got the right one? Because there's a few Cromwells, I think.
CMW.
Okay.
No,
I haven't seen much about
Yeah.
that.
I'm not an investor in Cromwell, so I guess I missed it. Now, Paul, this is from August. T&E, Technology One.
Look, I think we got some coverage of that in today's report from James, from
Tony?
Tony Feathers.
Still likes it, does he?
I
He's
think-
been a fan in the past.
Yeah, I know he's writing about 2 tech stocks. I just haven't seen it, and I'm betting it's Technology one of the ones he likes most. But so look, have a look at today's Switzer Super report. It'll be out sometime early this afternoon. I'm guessing T&E will be one of the stocks that Tony's talking about.
Yeah, and analysts got 9% upside, August. Errol, I'd be interested in your views on Whitehaven Coal.
Look, sure, if you want to stock, it's cheap, buy Whitehaven Coal.
Yeah.
If you want to play, I just think the ESG theme is going to kill these stocks. I'm sorry. That doesn't mean there won't be some of these stocks will probably end up delisting and going private.
Good point.
You know,
Yeah.
but you just can't ignore the fact that so many major funds will not buy coal. And so, there's always going to be a price for somebody who's prepared to say, I don't care what the big fund managers think. And they'll that might end up being they'll take it off the ASX and they'll privatize it and it'll go to some billionaire will just sit on it and happily mine it. But
Could a Chinese company buy it, Paul?
I don't think they'd be allowed to, Pete.
No, they wouldn't
but
be allowed.
I think anything in Whitehaven is mainly in thermal coal, which of course is coking coal. There's a ongoing need for thermal coal is the one that
Energy. Yes,
people get upset about.
Yeah.
I wouldn't buy it.
Okay.
So conversely, I just don't think I just think you're going to find it harder and harder to get out of that stock.
Yeah. Analysts think about 73% upside. So you're with your Paul.
But that's a valuation.
Yeah.
It's not a realization of
No.
what's happening in the market.
Let's go to the next one. We've got Mike. Do you guys consider any hydrogen producing entities to be positioned for hydrogen fuel cells in vehicles? Also, Platinum Mining Company, which
I don't think we had that one hydrogen question a few times. I don't think there's anyone who's yet substantive in that field. There's someone will correct me.
IFL.
Oh, IWF. Pass. I haven't just checked that for the last week. As I said, the jury is out. I wouldn't take part in their rights, which I think might now have closed, or their SPP. I think that, as I said the other week, I don't know why IWF can make a go of MLC when NAB can't. Sorry, just not. This is. I mean, they might prove me wrong totally here, and this will be a game-changing acquisition for IWF if they do. Right? So let's give them the benefit of the doubt. But I think as investors, I think the odds are against it.
Yeah, next question, Paul.
We're sort of running out of time here, Pete.
Time. One more. CBA, Paul.
Well, I think the way to play banks is CBA plus one other. Look, they're just friendless at the moment, and I sort of probably just don't think you need to use firepower in the banks at the moment. I wouldn't sell them, but I just don't see the rush to buy them.
Yeah, I think you're probably right there too, Paul. All right. So
I mean, they are the best run bank. So when the market gets a little more confidence, I mean, I think we're in the phase now of September where the market's starting to say, yep, this is going to be a bit tougher than people expect. And banks, no one has any idea how this is going to play out in terms of when the pain starts to hit. So it's sort of in that category.
Okay, we're out of time. I will say to the hydrogen guy, Hazer Group, that's one worth having a look at. We've interviewed the CEO. I haven't seen. Can you quickly pull Hazer Group up? HAZER. There it is there. Okay. Well, it rocketed out of the crash. It's going sideways at the moment. If you go to our television show, we interviewed the CEO of Hazer Group. I think they're a company with a future, and they've got some interesting things happening, but it's probably ahead of them rather than right now. We're out of time, guys. I'm really sorry. Thanks for joining us. Do we do one next week?
You'll be here next week, yeah?
Yeah, I'm just trying to work out when our big monthly one is on. That's when we don't do this. But thanks very much for joining us, and we look forward to communicating with you next week, and also in the Switzer report as well. Thanks for joining us.